Good morning and welcome back to the latest edition of the InvestTalk market analysis for the week ending July 21st, 2023. Appreciate you all tuning in and subscribing to this channel as well as our podcast, InvestTalk. I'm Justin Klein, and today I am going to title the video Growth Stocks Falter as Commodities Grind Higher. But first, let's get into some of the economic data. You had retail sales, ex motor vehicles and parts dealers, that was up 0.16%. So you continue to see that the consumer is holding in there. And so it's hard for a recession to really happen if the consumer is continue to grow their spending month over month. Now, the New York Fed, their business leader survey, and this would be considered the soft survey, which typically is weaker than the actual hard numbers. This came in flat. So if you adjust for what tends to be kind of off with these surveys, you would say that this is kind of positive, right? And this is the first time it's been at zero since September of last year. So it just shows you that, maybe business is starting to look up a little bit. Now, on the industrial production side, you did have the second month in a row of declines. So that's something to watch, but you can still see the trend really since January has been fairly positive. The first two consecutive months of negative growth. So something to keep an eye on. Building permits, this is really where the data was the weakest, was in the housing market. You have, obviously, interest rates are higher, and you have a housing market where there's not a lot of activity because there's not a lot of existing inventory. But on the building permit side, this is obviously new homes, and the new homes market has been strong. And this is the first indication, this is a leading indicator. Before you build a home, you have to pull permits. Then you have to start the home, which we'll get to buildings or housing starts in a second. But this is a leading indicator. So you have negative 3.74% month over month. So that's the first sign that there's an issue, but it's still in an uptrend, right? This is the actual building permits, not just month over month. And you can see really it's been an uptrend since January. But housing starts, that one has been the strongest, right? So you can start a house that you pull permits in a long time ago. Okay, so housing starts, that's been doing fairly well, really since the beginning of the year, right? Trending higher overall. But the existing, month over month, yeah, this is down 8%. So that's the first indication where you have the permits and the starts. That is pointing in the same direction, very negative. And so I think that was the first indicator. And I'll show you ITB. Let me pull this ITB over to you. This is ITB. And you saw on Thursday, that was a decent reversal on these numbers. So could this be end of the big run in new home stocks, the home builders? Maybe, potentially, something to watch out for. Now, existing home sales, that also ticked down again to negative 3%. So housing market remains relatively weak. Now, let's just pivot over to the markets, and I'm going to do this first. So this is not that one, Dow Jones, UBS, there we go. This is the commodity index, and that's why I titled this video, Commodities Grinding Higher, and you see this here. This is just the commodity tracking index. So commodities are higher, grinding higher, and a lot of that has to do with the dollar here. The dollar took that stair step down last week, and this week you had a little bit of a bounce back, but still, this looks like the start of the next leg down for the dollar overall, and that is negative for the growth side of the market. And that's why I said in the title of this video that growth stocks are faltering. And you can see that the last 2-3 days of the week, growth stocks really reversed, and pretty decent volume. And if you zoom out to a weekly chart, you can see this is actually a negative topping tail. See high volume. We started the week off strong, and you reversed and closed near the lows. That is a negative for the growth side, and you can see here that this is also right near this pivot point here, where the market reversed back in April of last year. Okay, and so whenever you see, this was a pullback to the 100-day moving average, it tried to recover and it failed. And when you get back to that level, that's going to be another potential failure point. Now, if you just go over to the tech stocks XLK, now that's a little bit different picture, but it's very similar, right? Topping tail, high volume right near the highs. So this could be a false breakout that could mean another rollover in tech, something definitely to watch. Now, if you take the growth to value trade, and you can see this, I talked about this, this is a weekly chart. This is a very bearish candle here. You can see you saw this type of action back here at the end of 2021, and that was a harbinger for that next downtrend in growth versus value. And I could easily see this being the start of it. I talked about how June was the first month basically since what was this? Yeah, pretty much since February. February, we had a flat growth to value month. June, we had a flat growth to value month, the first month since February. And you tried to get that breakout and you got a failure. Okay. So this could be viewed as bullish consolidation, and it tried to break out earlier in the week and it failed mightily and closed at the lows of the week. Look at the MACD, also another tell that this was probably a fake breakout, and it's been that so far. So this counter trend rally, and I'll zoom out here to the weekly, this counter trend rally of, remember last year, when this is in a decline, growth is underperforming, value is outperforming. This has been a counter trend rally, a pretty strong one, but sentiment got offsides, too much bullishness built into a lot of these, growthier names, and you're starting to see that reverse. The SMH also had a rough week. This is the semiconductor ETF also with that reversal, and you had the likes of AMD reverse. That was a big tell. Nvidia, that one also started to reverse as well, and you're seeing that MACD divergence here. So something to watch. But even your bellwether growthier names, Tesla with the big reversal. You had Carvana had good earnings, and it basically sold off since then. Now it's still up from earnings, but remember, this is highly shorted, so not to. This was, I think, a lot of short covering happening there. But that's just what you're seeing in general. You're seeing a lot of these names that everybody was jumping on, and thought that the growth side of the market is fine. Well, newsflash, as earnings season goes on, the reaction to earnings is not looking so hot. So just be on the lookout for that. That's why I told you a couple weeks ago, new trends happening in the markets, and I want you to be aware of that. Whereas the value side, let's just go to the Bond V. So remember, this is the Russell 1000 value. So this week, this is an up week, right? Nothing wrong with this week. It's actually a breakout week for the value side of the market, whereas the growth side, it's a reversal week. And there was kind of this tell, like I said, in June, and as July moves along, you're starting to see this play out. And you can see, let's go to a monthly chart. Monthly chart on the Von V looks fine, whereas the IWF, that's starting to get a bit of reversal at this high candle. Look at this breakdown candle on the monthly. So all of these technical indicators are lining up. The trends are starting to emerge as I think the back half of this year is going to look a lot like 2022, maybe not as strong as a trend down in the S&P, and we'll pivot over there, right? Obviously, we'll go to a weekly chart. Obviously, the S&P is overweight the growth side of the market. That's why you saw this kind of consistent grind down last year. I could see that. I think it's probably more minor of a pullback in the S&P this quarter, this half of the year. But I definitely don't think you're going to see the strong uptrend that we've seen really since the lows in March, since the credit crisis. Now the 10-year has pulled back. You continue to see a series of lower highs and lower lows. Okay, right. The high on the 10-year here was 4.091. The high here was 4.09. Oh, actually made a slightly higher high. That's interesting. Something to watch out for there. So this is kind of a wedge pattern. Now that you look at this, and we'll see which way we break out. What's going to win out? Is it going to be the let's probably wedge that looks something like this. Okay. And is it going to be the slower economy and the potential for pricing in more Fed rate cuts in 2024? Is that what's going to win out and push the 10-year down? Or is it going to be our fiscal situation and the fact that the Fed is doing QT? Is that going to push rates to break out? Okay, and inflation, right, rising with the commodities going up. Is that going to push rates to break out? That's the big question here. This is a battle that's going on with the overall economy and markets, and we'll see which way we go. But I do think we're in this kind of sideways, choppy trend until we get a resolution, probably end of this year, early next year, in rates overall. Now let's pivot over to some of the subsectors. Energy grinding higher here. Pretty strong week, really, for all the last 4 days. The energy market has grinded higher. The OIH as well. You had that breakout 2 weeks ago and just consolidate that. So this is the oil services part of the market. USO, this is the oil prices. That is now above the 200-day moving average. So that's looking strong as well. So nothing really wrong here, to be honest with you, in the commodity space. You're starting to see, look at materials, starting to get grind to the upside, just a consolidation week there. But some nice tailwinds of the weak dollar certainly playing out in the commodity space overall. Let's look at the credit markets, SHYG to SHY. And that one remains strong here, right? This is fine. So credit markets aren't deteriorating in any way. I remember the credit markets; they're definitely weighted towards those names in the commodity space and the value side of the market, right? Banks, commodity producers; those are the ones that tend to have more debt on their balance sheet than the tech stocks. Most tech stocks they either have great businesses and strong cash flow, and they pay off that debt, or they issue more shares and dilute shareholders. That's typically how they raise capital. Not nearly as often from the debt markets as your industrial names, commodity names, basic materials, and banks, etc. Okay, commercial mortgage-backed securities. Let's take a look at this, see if that has broken down at all. That's holding in there just fine. Let's look at the precious metal market, silver to gold ratio. That is just consolidation week, right? Breakout last week, just kind of a chop sideways so far this week. Gold had a bit of a pullback the last 2 days, but still remains in that uptrend. The GDX as well, a little bit of pullback the last few days, but nice positive day on Friday. I think that is ready for some consolidation before that ultimate move higher. Industrials remain strong. Nothing wrong on that front. And let's look at the transportation index. Transportation index looks fine. So, the trend what you're seeing here is, the economy is slowing, mostly in the back half of last year and the beginning of this year, and I think that's what brought the positive aspects to the growth side of the market, saying, okay, there's no longer growth, so in the economy. So we're going to chase these growthier names. And that's what happened at the beginning of this year. Now, if the economy is reaccelerating, is that going to tell you that money is going to flow back into the value side of the market? Could that be the catalyst? Could the weaker dollar be the catalyst? That's kind of what I'm seeing here. Remember, a weak dollar is good for asset prices. It's good for the overall economy. Our services, our goods and services are cheaper to foreigners when our dollar is weaker. So that's good for businesses here in the US, good for corporate earnings overall. Okay, so it's very important to not let your biases, whether positive or negative on the economy, whether you are a Republican or Democrat or independent, whichever way you lean, to not let that seep into your thought process. It's really about calling balls and strikes here and looking at the markets and the economy as the data comes in and assessing the trends that are in place and that are potentially going to emerge. There's always going to be a new trend eventually emerging. You have to be on the lookout for that. And that's kind of what we continue to see here overall. Lastly, I'll just show you, here's the IWM to the Qs. That continues to make headway. You're seeing the MACD almost cross the one line. This is big. If this crosses the one line, that's saying this is now in an uptrend and small caps are likely to outperform. Once again, an indicator that the economy is in decent footing and maybe reaccelerating to the upside on the back of the weaker dollar and the Fed maybe being done hiking rates. They're expected to hike rates next week, but pause through the end of the year. So that's where we're at. Continue rotation in the trends. There are opportunities. There are obviously risks, especially after this big run in markets as a whole, but especially that growth side of the market. So I wanted to give you a heads up on all of that. I appreciate you all tuning in to this channel as well as our podcast InvestTalk. And I'll remind you the contents of this video are for educational purposes only. It should not be construed as a recommendation to buy or sell a security or to participate in investment strategy. The views are my own and do not represent those of KP Financial or those associated. Have a great weekend.